Investors have been digesting information on the new presidential administration's proposals that will impact either stocks or the economy. Our chief equity strategist and economist John Blank says something they should consider are the Biden trades. John, what does that mean exactly?
Well, basically, the Biden trades are trades that have been put on by stock traders in anticipation of big windfalls in spending from Biden administration programs, like the $1.9 trillion stimulus, the electric vehicle swapping in for the federal fleet, real incentives for climate change that percolate into the energy industry, mostly the alternative energy industry. But it probably is going to go beyond that, and that's what people should be aware of is the Biden trades. A lot of them were put on for alternative energy the last 3 months, but there might be new Biden trades as we really see what the Biden administration is going to do.
So at this point, do you have the actual trades?
Yeah, if you want to go in and look at what the trades are, just go to the top most liquid alternative energy, clean energy ETFs, and look at the amount of alternative energy stocks that are up. I mean, it's just amazing to see. The solar particularly has been popping for months now.
Is that where these trades are evidenced in those ETFs?
Pretty much. I mean, you can get more specific than that, and when you look into the actual names of these stocks, but it tends to be, for the most part, in these solar clean energy stocks.
You wrote recently that one trade that is gripping the markets in the early days of the 2021 year here is reflation. And it's nowhere more evident than in bonds, where U.S. 10-year Treasury bonds topped 1% on the Georgia Senate runoff results. What's the impact of this going to be on the economy here and globally?
Well, first of all, it doesn't mean a whole lot. I mean, we should have seen some rise in interest rates for the fact that the inflation expectations are going up now with a stronger economy. So in some sense, it's positive. And the Fed is keeping the Fed funds rate to zero on the short end until the end of 2023. So what the 10-year Treasury now represents is a proxy for a inflation, core consumer inflation rate in the next few years. So today I'm looking at 1.04% in the 10-year Treasury. It's been as high as 1.2% recently. I should say 1.1%. So, we might get up to 2% on the U.S. Treasury. I wouldn't worry about it. That's just going to indicate that, we are getting closer to a point when it gets to 2%, if it gets there, that the Fed would start to taper on their quantitative easing for the reason that they cannot let inflation get further than that.
You've also outlined 5 themes from the old year, 2020, that you feel are still relevant for investors to watch this year. Briefly, what are they, and do they correlate with the Biden trades we spoke of?
Yeah, well, number one, tech stocks should still be hot this year. They've been hot 11 of 12 years in a row. The other is money printing is not going away, and the Fed is going to have your backs for this entire year. The third one is Bitcoin and Tesla, I think, are different than tech stocks, and they represent, I said this a month ago, that they're bubbles and should get out of them, and they're both selling off now. So if you got Bitcoin or Tesla, I'd get out of them and book my profits. And the other couple trades that are in there, the trading volume of the retail trader, obviously with GameStop and AMC Theaters and a number of other heavily shorted stocks now, the retail trader is going to continue to be a dominant force in the marketplace. Social media affected our politics, and it's definitely going to affect our stock trading in the same meaningful way. And the final one is that small cap stocks are going to do better this year than large cap stocks. And I think that's a trade that you can keep on for this entire year. And I would finish with that the small cap trade is a Biden trade because Biden's going to roll the vaccines out, and he is going to help the smaller businesses relative to the larger businesses, and that's going to be their focus. And that is another Biden trade, the small cap Russell 2000.
Is there a Biden trade regarding China?
There could be. That's an example of a Biden trade that hasn't emerged yet, but when they start talking and we learn the outlines of how that particular discussion goes, and if there is actually tariff reductions, there will be a Biden trade. So what you look for is meaningful tariff reductions. Discussions at China, I doubt will be, they're going to happen regardless. It'll be actual steps that are taken to reduce the actual interference with trade that would be a Biden trade.
So is all of what we've discussed here just the bottom line at what the markets are going to be moving on for the foreseeable future?
Well, we're at S&P 3,800, Terry. My target for the year is 4,000, which is 200 points. So I don't think there's going to be a lot of movement from here. It might be more sideways than anything. And I think the basic point of the Biden trades is most of it's in and priced, and you really don't have a Biden trade. But that doesn't mean I'm bearish, because the Fed has your back until the end of 2023. So 2021, certainly the Fed has your back. So just stay with your stocks.
And you're watching three bank stocks now that are kind of on the move. They're Square, Goldman Sachs, and the Canadian Imperial Bank of Commerce.
Yeah, well, this is another part of a Biden trade, which is, does he help mainstream, old school banks? Doubtlessly no. And does he actually help more digital fintech banks? So Square would be my fintech call. It's an A-rated Zacks stock, number 2 rated. I see it up 5.5% today, which is January the 28th. And Square is your classic, stock for the millennials. They like it, and it's the market cap, just to get an idea, is $94 billion. If we go to Goldman Sachs, the stock's at 276, and this market cap's at $96 billion. So Square and Goldman Sachs have the same market cap. That's unbelievable. So just to give you an idea, outside the United States, by the way, we have Canadian Imperial Bank, which is a C growth score. And by the way, Goldman Sachs had an F growth score. So the difference is A-rated Square for growth, F for Goldman, and C for Canadian Imperial Bank. Canadian Imperial Bank's $86 a share and $39 billion in market cap. The stock doesn't go anywhere. Nobody cares. And by the way, why should you care? Because Canadian Imperial Bank pays 5% annual dividends. So overlooked stocks like Canadian Imperial Bank can be a great source for an income investor right now, because you're going to pick up 5%. When the Treasury's at 1 or 2%, that's where you want to put income investor money to work.
Taking a look at issues affecting the markets with our chief equity strategist and economist, John Blank. And as always, with John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.